One of the most common questions I get asked around life insurance is how to determine the right amount of coverage that you need. I typically like to have this conversation after we've built out your full financial plan. Because if we know that we're already on track to pay off your debt, to accomplish your goals, like sending your kids to college or buying that car, buying the house that you want, retiring at a certain age, then we know that in order for your family to still accomplish all of those goals, whether or not you are here, all we need to do is replace your current income. If you're not on track for your financial goals, we have to have a different conversation. But if we are, we can start with your income. And I really like that approach because then we can just look at how much of your income do we need to replace and for how long. Now, if you go to a typical insurance agent, they'll say, okay, you're making $100,000. You want to replace your income until the kids are out of college. That's 20 years, 100,000 times 20. We're looking at really high death benefits. That's why I recommend talking to a financial advisor who's really looking at your financial picture as a whole, because we know that in reality, you're not just going to sit on that cash and spread that out and divide that out over 20 years. In reality, we're going to take that money, we're going to invest it and create an income stream for you that will help you to grow your money over time so that we can spread that money out for longer. And what that means is that we can start with a much smaller value up front in order to support that. That can help us get to a much smaller number up front. But one thing to be wary of is that's just replacing our income. And in reality, when somebody receives $750,000 up front, they tend to get really generous with that. They tend to feel like that's a lot of money, and they can use some of that to pay for a funeral. They can use some of that to give to the kids, to give to other family members, to go out and, do those bucket list items that they've wanted to do while they're grieving. While all of those things are important, if we use the money that was supposed to be set aside for income on those other items, suddenly our financial plan is at risk. So what we really recommend doing is having this conversation with your loved ones ahead of time and really just being realistic with yourselves. Realistically, if something happened to you tomorrow, would you want money set aside for a funeral? Would you want to give some money to your parents, to your siblings? Would you want money set aside specifically for your kids? And add that on top of your income number. That can really help us determine that total number of life insurance coverage that we need.